So, when you're running a business out of your home, you can do deductions. So, I had ChatGPT throw in here, running a home-based business with a W-2 as their main income. And I'm showing what is fully deductible and what is not. So, let's just kick it off with all your Schedule C's, which is a business owner's best friend here. Any advertising and marketing, fully deductible. Business cards, flyers, website, online ads, fully deductible. Gotta love it. Car and truck expenses. You can either do standard mileage if you travel a bunch, or do actual expenses, which I prefer, because what actual expenses is I have 3 business vehicles. I just got a clutch line for an 85 Chevy truck that I use for going to auctions. That's a business vehicle, believe it or not, even though I look styling in it. It's an 85, and anyway, that's under repairs because it's a 100% business vehicle. It's 100% repair on that vehicle. Any gas I put in that thing that gets, let's just call it 8 miles to the gallon, yeah. Insurance on that vehicle, yeah, fully deductible. Only if you do on your, that's just business only vehicles. On your personal vehicle, if you do all this on your personal vehicle, you can only claim how much of that you used for business. So my other vehicle, my daily driver, I figure I use it about, let's just say 30% on it as being real nice. I use it 30% of the time for business. All these, the gas, the repairs, the insurance, the deducted depreciation, which everything's paid off, but whatever, if I had a loan, that would all be counted down by 30%. So there's 30% of savings on your vehicle. Okay? And if you use a vehicle like I do just for business, that's 100%. Okay? Nice little deduction there. If you don't have a business, you're not getting it. There you go. And yeah, driving to your job is not deductible. Commissions and fees. Your eBay fees, deductible. PayPal fees, deductible. Etsy, yada, yada, yada. All deductible. Fully deductible. Gotta love it. Contract labor. If you do contract for your job, or if you have contractors for your job, that's paid for. If you have them build something, so you gotta pay them with a 1099. You gotta issue them a 1099 if under 600, and then it's fully deductible. I think there's a limit of $2,000. I'm not sure about that. There's something you gotta look in contract labor. Depreciation in section 179. Yeah. All your business assets, your computers, your cameras, your tools, believe it or not, furniture for your business / home. Okay? If you deck out, buy shelving for your business, that is almost, it's not fully deductible. It's got a limit of 1 million. There you go. Okay? But let's just say it's fully deductible, because if you're spending $1 million on your business, you're probably not working a job on top of that. Okay? Anyway, insurance other than health insurance, business liability insurance, fully deductible. That includes your business liability insurance for like $1 million of coverage in case some kid swallows one of your Beanie Babies. Okay, there you go. That's covered. Rider on your homeowner's insurance. If some states require it, some don't. Anyway, fully deductible. Business only loans and business only credit card interest, fully deductible. Gotta love it. That's one you can. So when you're using all these cards and you're getting points and all that, if you do have interest on that, which you don't want interest. Interest is still, I went over this yesterday. Interest is something we don't want, because you're paying $120, and even though you can claim the interest, that's still $120 down the principal. So you don't want that interest, or you don't want the fees, even though it's fully deductible, whatever. Okay, you don't want it either way, but it is fully deductible. Okay. Legal and professional service. Talk with a CPA about all this. I'm not a CPA. I'm not a professional. I'm just some guy that I've been doing this a while and I found all this stuff out. That's why it makes sense to actually open up a business in 25. They want you to run a business. So your CPA, your attorney fees, your accountant, tax prep, CPA fees are all fully deductible. Okay, and if they're not reminding you of that, they're not doing their job. So that fee is fully deductible. Office expenses. Anything you use to do your job is fully deductible. Your supplies, all your labels, all your small equipment like a printer, all your business software like, I don't know, Excel or accounting software or AI software, fully deductible. Pension and profit sharing programs, these are only if you have an employee. If you don't have employees, forget this line. It doesn't matter. Anyway, if you do have employees, you can give them contribution limits, 25% net and all that, but only if you have employees. And starting out, employee is an expense that it's an expense. So if you have $60,000 going to an employee that you can pretty much do to yourself because you're not big enough yet for employees, for that $60,000 employee, you don't have to worry about all this. But if you do got to pay for that $60,000 employee, yeah, throw them in retirement plans, match that stuff. They'll love it. Okay? And I think that has a maintenance program too, and a maintenance fee, but I'm not 100% sure. I'm not a CPA. Rent or lease. If you rent a vehicle, let's say you go out of town, we're going to get to that later, but when you go out of town, you rent a vehicle, that is fully deductible. Any machinery you use, let's say you need to let's say you need to rent a U-Haul. That's a vehicle. Let's say you need to rent a trailer. Well, that's equipment. Let's say you need to rent a generator. Machinery. Yeah, there we are. Let's say you need to rent a generator to run your booth at your whatever event. You know, you rent the vehicle, you rent the generator, and maybe you're pulling a trailer with a generator on it. Okay, we got all three covered now for a booth that you're going to. All that is fully deductible. Love making stuff up as I go. All right, rent, not your business property. This is not your home rent. Okay, this is only things that you're renting for the business. It's only property items, storage units. It's pretty much all I can talk about off the top of my head. I'm sure there's a couple others that you're renting. That's property that you're renting is fully deductible. And actually, items that you're renting, fully deductible. A lot, I'm talking with a CPA, but a lot of those things that you're renting for your business, fully deductible. Repairs and maintenance. Repairs for business equipment or property. This is a big one. So, if you have a fence that is business for your business, 100% fenced off area for your business to keep something out, and that fence needs maintenance to keep dogs out, let's just say dogs, to keep dogs from tearing up the fence and getting into the truck yard or whatever the heck you got, securing those vehicles, that's fully deductible. Business equipment, also fully deductible. They cover business equipment like 4 or 5 different times, but it's always fully deductible unless you're using it for personal use, and then you take a percentage. Supplies. Any items consumed in the course of business, not inventory, which huge difference, but this is your often confused with office supplies. Okay? You know, office, because this says supplies. This says supplies. So, any items consumed in the course of business that are not office supplies. Let's say you're painting cars. Those would not be office supplies. Those sanding pads would not be office supplies. Those would be supplies. That's the best example I can come up off the top of my head. Fully deductible. Taxes and licenses. Another big one. Business licenses. Big one. Any permits that are used for business only use. They should have said that. Yes. Regulatory fees related to business. Fully deductible. Travel. Sorry about that. This one's tricky. Okay. If you're traveling to a event for business only, you need to stay overnight. So if you just went to eBay Open, it was like last week. So if you went to eBay Open on business only use and you stayed in a hotel, okay, the airfare's covered, the hotel's covered, any rental cars are covered, only for business use. If it's a 2-day event and you end up staying 2 weeks in Vegas, you might be able to write off 2 days of that. And even that return airfare is sketchy if you can claim that. Talk with a CPA. It might be, the return might, you got to get home. So, yeah, actually that is, because you got to get home to your business, so you got to go back. But yeah, that is a fully deduction. Meals, this is sketchy, but I don't do it. But meals, when you're in that hotel, okay, 50% of your meals are covered, but you must document everything like a hawk, okay? And I don't know if that cost covers tip. I imagine it does not cover tip. I imagine it covers the base cost. So if you're tipping, I don't know, let's just say 40%, whatever the hell it is today, that is the norm. I don't eat out a lot. So like if you're tipping like 40%, 50% of the base meal is covered, and then that tip might not be covered. Talk with a CPA. Okay, let's get to something that can actually help with this if you're just starting out, you want to start a business out of your home. That's a huge one. Utilities are up. How would you like to save? Okay, I claim 30% of my home. Okay, so the business portion of my home is 30%. So my phone, my internet, or dedicated utility bills, gas, and gas, electric. I run a well, so I don't have water. But like my phone, my internet, 30% off, 30% off, 30% off. Deductible. Because I'm running a business out of my home. If I was just running a business, if I wasn't running this out of my house, if I had a warehouse with phone, internet, utility bills, and they'd have to be business, by the way, which is almost twice the price. So it's like 100% markup on these. So I think I'm saving more doing it this way, but whatever. Those are fully deductible. God dang, I'm sorry. Wages. If you're paying employees, those wages are fully deductible. Why am I not getting paid more at my W-4 job? Whatever. Yeah, okay. So those are fully deductible. Just doing the math on this. I'm trying to figure out why employers don't pay their employees more if it's a fully deduction. I don't know. Maybe there's something in there. Talk with the CPA. Okay. Other expenses. They pretty much cover everything else here. Any bank fees. fully deductible. Merchant fees, Stripe, PayPal, if you have, what the hell's it called? Whatnot, they use Stripe. Those merchant fees are paid off. Anything through your eBay fees and all that, all deductible. Any dues for, maybe you got, I don't know, dues, you can come up with that. Any continuing education, that's another big one. If you need to do classes to maintain your business, that is a fully deductible item. That's a big one because you can use that to learn and further yourself through your home business, and then improve that to move that onto a higher paying normal 1040 job. And then once you do that, you can move higher in your other job from your base job. From your home business, you can move to a higher paying job and still have your business that's related to that. So if you need to learn, if you got to go to a course or a seminar, that's continuing education related to your business. If it's for your business, it's continuing education for your business. Fully deductible. That's a big one. Now, I imagine there is a limit. There's probably a limit to this, but that's a big one. Uniforms, not everyday clothing, is fully deductible. That's like if you're running a shop and you need uniforms, I guess if you're running a shop out of your home, you could do that with uniforms if that's really more for shops. But those uniforms are fully deductible if it is your business. This is all you running a business out of your home to get these deductions, which can save you a good amount. Like I'm saying. So here we are. I have 30% of my home dedicated, and I'm being generous there. I've done the math. It's closer to like 42%, but 30% is something that I can throw out there and that I won't get any questions. I'm not going to make any profit for my first 4 years. Now, my net is going to be 0 for 4 years. Now, my base is actually going up. It's going up and going up and going up. But I'm using that to then take that to pay off expenses and put those expenses in, or not expenses. I'm using that to buy equipment. So I'll be buying equipment for the next 4 years and then pretty much ending up with 0 as the profit on my taxes when you factor in all these expenses. So here we go. Home office deduction, 30%. Okay? Must be used for business. That is a big deal. Must be an area you only use for business. If you're using your living room, no problem with that. You can only cut the square footage that you have fenced off for that business, for that desk and whatever. If you only have a 10 by 15 area for a home office, because you're in New York or something, okay, you can only claim that, 10 by 15, 150 square foot area as your home business, and you can only claim, let's say you have a 600 square foot home. Ooh, that's small. Okay, whatever. Let's go with 600 square. Let's say you are in New York. So let's say you have a 600 square foot home, and 150 feet of that you're using for business only. I could have put a 0 on those, but whatever. That's 25%. So 25% is what you can claim on these. Like I'm saying, I have 30%. So here we are anyway. You can do the simplified method, which is not smart in my book. It's the lazy method, because I'll show you why later. But if you do that, they just write off $1,500. That's all you can get. Do not pass go. Do not collect any more deductions. That is it. Use the simplified method. You get $5 square foot. It wouldn't even be $1,500 if you only had 150 feet. So yeah, that's not smart. But I'm sure there's situations where it is. But even this 150 square foot home, or 600 square foot living area, maybe you're sharing it with apartment, other people, so you only have 600 square feet of your own space, and 150 feet of that's going towards business only, 25%. So you can take 25% of everything else, which is going to be tons more than that $1,500 deduction. So if it works for you, it works for you, but that's a lazy way to do it. Anyway, so if you're doing the percentage method, the regular method, smart method, it's the percentage of your home's things. So you take the square foot divided by your office space, which I said was 150, divided by total square feet is was 600 in your mellow example here. That's 25%. So that would be 25% of all these if you only have square feet. So these are big. Your mortgage, interest, or rent. Okay? So let's say you're in New York and you're paying, and you have, let's just go with 25% because that was working before. You're in New York and your office only area is 25% of your home. And your rent, we're going to make the numbers nice and easy here, is $1,000 a month. So that is 25% of 1,000, $750 comes out of your pocket. $250 is deductible. Are you liking this yet? Okay. $750 comes out of your pocket. You're never going to see it again. $250 is deductible. You still got to pay it at start. Okay. You still got to pay it at the end of the month. But then at the end of the year, that $250, 1100. Okay, I'm a bit tired here. So 1100 can come off your business because that is deductible. That's more profit in your pocket at the end of the year, end of the tax year. Okay, 1100 that you don't have to pay towards taxes. That's one. Real estate taxes. If you do own a home, not even own a home, if you're paying a mortgage, any of those real estate taxes, you can write them off. Oh, if your real estate taxes went up recently, which they probably have, yeah. So if you're paying like $2,000 in real estate taxes, 500 of that is and a little 25% of that's 500. So 500 of that is more profit, is another deduction, which is more profit you can put in your pocket at the end of the tax year. There's another 500. We're up to 750. Homeowners renter's insurance. You know you got it. It might even be in with your mortgage. A lot of them are. That is also a deduction. Where am I? $750. Let's just call that $50. Nice little around $800 at this point. Yeah. Utilities, gas, water, internet, and trash. Big deal. All these utilities. If you're 25%, 25% of the electric, 25% of the gas, 25% of the water, 25% of the internet, 25% of any trash pickup, deductible. Now the other 75% comes out your pocket. But because you have a business out of the home, deductible, 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 deductible. Ain't that great? Okay. Depreciation if you own the home. Deductible. Fully deductible up to the business use. So that is 25% of your property. Now, if you're renting, which you probably are, if you're in like New York, if you own the home is a big line. So it's only if you own the home. Okay? Repairs. Any direct repair. Once again, if you're renting, this is if you own or do the thing. All right. Repairs. 100% if you're doing a repair on a business building. 100% deductible. If it's something related to your home, it's a percentage. So, if you need to upgrade the wiring in a barn, I'll give you my barn example. My barn doesn't have any 220 in it. I'm going to need 220 for to run stuff in the barn, which the barn's used for business. At least 2%. Okay? I'm going to say, let's say the barn is 30%, just like the house, to get the numbers nice and easy. Because I'm not using 100% of that barn for business, because I do want to keep a couple things inside, that is a percentage, and that is 30%. So 30% of that repair of the upgrading the thing is deductible. Okay? Once again, talk with the CPA. I'm not a professional. Pretty sure I just backed myself back and forth on that one, but there you go. Alright. Fully deductible. Big deal. Fully deductible up to the business use percentage. So if I need to put in 100 feet of 220 to my box, and 100, and then a box in the barn, then a couple other things, and then run some one out the walls, all deductible for the business percentage of that part. Okay, there you go. Vehicle use, yeah. All right, there you are. Whatever, I already went over that. Oh yeah, that don't matter. There you are, a couple little bit of things for driving, but basically, if you're using it for business mileage, and you're using the mileage thing, it's 70 cents per mile. Otherwise, if you're not, you're using the, where'd it go? Car and truck. You're using the actual expenses, which I think pays for more because it covers your gas, your repairs, your insurance, and your depreciation. So if you bought a vehicle that was just for business, you only use it for business, and that thing is depreciated 20 grand in 2 years, because that's how stuff is these days. If you drove it right off the lot and it depreciated 20%, you can fully deduct that for, as it's only a business expense, as it's only a business vehicle. If it's a personal / business vehicle, you can only do the percentage on that. But still, I think it's high, like I'm saying, 20 grand versus 70 cents per mile. You're going to have to do a lot of driving, but whatever. Anyway, there you go. And if you're doing the math here, if you're running a business just because you don't want and not doing it legitimately, just because you want to not pay taxes, you're missing out on all this stuff. Okay? You're missing out on all these deductions. 25%. Let's go with 3 grand. So if you make 10 grand, you make 10 grand. Let's go with 3 grand of that is fully deductible. A nice little round number. Okay? That otherwise you would not be getting that 3 grand. Okay? So you want to jump into that. You want to do that. And this is the reason why. It pays more. Doesn't pay anything. because it's a deduction. It saves more at the end of the year because you're able to claim all those things. Because you're able to claim all those things. Now so you can claim all those things and it works out because you're doing it the right way and you're doing the taxes, which this is 2025, folks. If you think you're getting away with something these days, you're not. This isn't 1995. This is 2025. You know, they know if you're selling stuff like on Facebook. Did you sell this off Facebook? No, I didn't sell this off Facebook. No, that little line. Did you sell this off Facebook? No, I didn't. You know, well, 3 or 4 of those, you know, and they got the messages. They got the messages with you and the buyer, you know, whatever. So, and yeah, if you have a state, like if you sell a vehicle and the state tax, and my state tax is 6%, I got to pay 6% on that cash sale towards taxes. That being said, the maintenance on that vehicle was fully deductible if I used it for business use. I'm not even going to go into that. Anyway, talk to your CPA about all this stuff. But if you're thinking about opening up a business, and if you're thinking about opening up a business, first thing you want to do is get online and figure out what you got to do. But the first thing you want to do is getting a EIN, which is you're gonna have to get, first things first, you need a DBA, which is doing business as. Okay, that can be anything. Okay, my business is called Cereal Seller. Okay, and I like that because it sounds like 3 or 4 different things into one. But it's Cereals Seller, as in basement cellar, you know, and all that. But like, that is my DBA. That's what I'm doing business as. Once you have your DBA established, you can then get an EIN, which is, oh crap. I don't script these things. Anyway, look it up. Get an EIN, okay? And that makes you legitimate. Okay, that makes you a legitimate business. You're registered with the state at that point. You might, depending on your county, you might need to register with your county first, and then you can get the EIN and register with the state. Sometimes it's the other way around. It depends on your area. But you want to get your EIN. Once you get your EIN, then you can go to virtually any bank, okay, and get a business account. I'm not talking about a second checking account, personal checking account, okay? I'm talking about a business-only account where your business is using your DBA and that business name is on the account, and that business name is, and everything linked to that account can be used for business expenses. And yes, you can get business credit cards and all that. I don't do credit cards, but like, you can do business credit cards and all that stuff. And if it works for you, it works for you. But like, that way you can do, first off, it separates your business and your personal right out the back, because you don't even want to go down that rabbit hole. But after you do that, it moves you into a different category as far as the banks and IRS are both established, where if you need to look something up, you can look at that business card account and go right to it and say, okay, look at this. I just bought that maintenance item, that little clutch cable for that truck. I did that like, let's say 3 hours ago. Not even that. Let's go with 3 hours ago. I did that 3 hours ago, and I put it in my little accounting program. But then, if there's any question about my accounting program, which it's on my phone, but whatever. If there's any question about my accounting program, I also have that that business account to reference. Okay, and that stays for a year. You have those records for a year. And then I also have that, if I keep the receipt, I also have the paper receipt to go off. But those are a limit of importance. The business putting it in your accounting program is the most important. Gotta do that. If for some reason the accounting program messes up, let's say it fries tomorrow, you can go to your bank records that are business only and see, and you're gonna have some fun, but you can then use that to figure out what expenses you had and what days and where and who are the retailers off that. Okay? And if that fails, then you're playing with paper receipts, and this way you're able to do it where those paper receipts are the last game, because that's something you just want to throw it in for the month. I have a box, I have a folder for the month. I just throw those receipts in that folder, and I never plan on opening them again. If I need them, they're there, but that's a worst case scenario. They're in that folder. If you have to, at the end of the year, you're counting receipts, you're doing it wrong. Okay, so anyway, having that EIN allows you a ton more stuff. Okay? And also, we're talking sole prop here, sole proprietor. As you're just starting out on eBay or what's not or whatever, you're sole prop. Everybody starts out a sole prop, and then they come to LLC, and then I think there's one before that. Then they come in LLC, and then you have the S corp and the whatever, all that fun stuff. But if you're just doing this for yourself as you're working a job like I am, and you don't have any employees, that's another big deal. If I have employees, I'm getting an LLC to cover my butt. But if it's just me, I'm not going to sue myself. Lawyer's going to laugh at you if you try to do that one. But and you're gonna pay for the lawyer, and the business is going to pay for the lawyer. Lawyer's going to be happy either way. So I'm not going to sue myself. So I don't have an LLC. Okay. And I have insurance. You, as a business, there it is. As a sole prop, you can have business liability insurance. Okay? That'll cover you in the event something happens. Let's go with that. All right? And it varies. So let's say you're driving your trailer with a box full of stuff on it. I don't know if this be covered under home or not, or auto or not. Man, I can't think of a scenario. Somebody gets hurt because something that your business did hurts them. How about that? And it's not auto. Let's say you let's say that you're taking some there you go. You're taking some shelving out of somebody's house and you damage their walls on the way out. Okay? And they say, I'm going to sue you because you put these big old holes in my drywall because you don't know what the heck you're doing, but whatever. That would be an insurance claim, and that would go to your business liability, and then you'd be covered. Okay? You can do that as a sole prop. As an LLC, I'm giving you the super short, not an accountant, not a professional, not an attorney, yada yada. As an LLC, if maybe you sold someone a lamp and for whatever reason they the wiring in that lamp caught fire and caught their house on fire, yeah. That's an LLC, because then they can come after you, potentially. Then they can come after you, and you're going to play that game. In worst case, they close your business down. They take everything from your business because, I don't know, it burnt up something important. Let's just go with that. When the house burned, something important burnt up, and it was a high-cost item. Yeah, let's go with that. You get what I'm saying. If that happened, then they could go by and take every asset your business has with an LLC. But your personal items would not be hurt. Basically, your business is going to start from zero because they're going to take everything your business has, potentially. Get a good attorney. If that situation happens, that's the first call I'd be making. But, like, there you go. Something that's not covered. I don't live in an HOA. But if I did, I'd be asking about HOA fees. I imagine that fits in here somewhere as a deduction. If CPA wants to jump in on that, it did not cover that. I'm going to ask it. I'm going to ask it right now. I'm going to type this one-handed. Ooh, that's horrible. Let's try that. Oh, no! HOA fees are not. Oh, here you go. Here you go. If you live in an HOA, like more and more people end up are HOA fees on home office. Okay. Okay, yeah. So it's the same as your home. All right. So they are deductible. Okay. So HOA fees are whatever the percentage. So if your home office is 10%, then 10% of your HOA fees are deductible. There you go. So if your HOA raises fees, you're still paying a majority of that, but there's another helpful deduction. So there you go. There you go. And if you don't have a home office, you cannot deduct HOA fees. You need to have the home office. That's a big deal. So if you have a business outside of your home, if you're driving to an office or driving to a shop, that's your 100% business. You can't claim your HOA fees for your home. But if you have an office, a home office that you work out of, if you have a home office and you have a business outside of your home, let's do that again. If you have a home office that's 10% of your home. Okay, I like that, 10%. So if you have a home office that's 10% of your home, and then you have a business that's 2 miles away, ideally, that'd be great. 20 miles away. Let's go with 20. That's more me, a little more realistic. You know, a business that's 20 miles away, you can claim 10% of these home office expenses for your home. And then you can claim 100% of the business expenses for your business. Okay? So you get both those. If you have a home office out of your home and then 100% business or 100% shop somewhere else, you can do that. And you can do all that with a sole prop. Now, that being said, if you have a business, an actual shop, you probably have an LLC. But there you go. Yeah. Because it's personal living expenses, yada, yada, yada. I think lawn care is covered in their maintenance too. Now that we see lawn here, I think that is also a percentage of your home. I'm pretty sure it is under maintenance. That might be 100. That might be 100%. Talk with the CPA about lawn care, because everybody likes to use somebody else. Yep. Limits. There you go. Yep. There you go. So if you're using the simplified method, like I'm saying, it sucks. So if you using the regular method and your HOA fees are let's make this work. If your HOA fees are let's make it a nice big number. Let's make it $1,000. Okay? So your HOA fees are $1,000. Okay? Your home office is 5 square feet. Okay? So if you're using the regular method, 10% is $100. 150 times 5. Oh crap. So yeah, actually, no. Then there's other things. There's everything else. So I'm not even gonna go into it. But everything added up, the regular method, almost always you make more. Same thing with the mileage versus actual on your vehicle. The actual almost always equals more. Almost always. You're going to have to do some big time driving for that mileage. Now, the mileage is easier. The mileage is stupid easy. Because for mileage, all you really need to do for mileage is at January 1st, you write down the mileage. If you're using this thing only for vehicle, only for business. First of the year, you write down the mileage. December 31st, you write down the mileage. Factor in your 70 cents per mile. It's 100% used vehicle. You're done. That's it. That's what you can claim. The other method, you can claim all the other thing, you got to itemize every item. You got to itemize the gas. You got to itemize the insurance. You got to itemize the other one. It's more complicated. Just like with this, just like with the simplified and regular method, it's more complicated, but it's worth the work. Okay? So, yeah, HOA fees can be covered. If you're in an HOA and you're running a home business out of that HOA home, yeah, that can be covered. And actually, if I was running in an HOA and I had a business, I'd be finding a way to buddy up to the HOA to maybe, like if I had lawn care, man, if I had lawn care, I'd be the HOA's best friend. You know, I'd be giving the HOA special discounts and coupons because you don't have to drive you're doing business dang near at your house. So like, there you go. I mean, you're in your own neighborhood, and all that stuff. Just make sure you do the good business, because if you don't, then you're going to make enemies with the HOA. And then that's another rabbit hole. So there you go. But there you go. Just talking about all these deductions that you get and all the savings that you get by having a home. Wrong. By having a business out of your home. By having a side hustle where you can make all this. And like I'm saying, I'm not making any profit. Everything I got for these first couple years is going into equipment. Okay? Everything I got is going into equipment. I'm keeping a little bit in the bank, mind you. You know? But my personal and my business are 100% separate. And I don't pay myself. I'm not going to pay myself for this for like 5 years either. Something other people don't think about. That you need to talk with a CPA. Because I don't know how that works. And I don't want to know. Because if you're running a W-2 job, that's your main income. Okay? And then if you're running a side hustle as a business, that's In my book, all that money goes towards business. Now, can you pay yourself? Talk with a CPA, because I don't know how it works, because I don't plan on paying myself for several years. Because anything you pay yourself, anytime that you take money out of that account for reasons that are not going to help the business. Okay, now there's expenses. I buy bubble wrap like nobody's business because I box everything up. I box everything up at time of listing, so everything's ready to go. Okay, so everything's ready to go. So I gotta buy bubble wrap and all my boxes and everything already before that. So all those business expenses need to come out of that account ahead of time. But if I was, if I only had $2,000 in the account, okay, and then I was, and I paid myself $500 a week, okay, that's $500 I'm not able to put towards something else. That's $500 of opportunity cost where I could have made 30%. Let's go with 30% because that's a realistic number. I could have made 30% profit on that $500 instead of putting that in my pocket at 0% profit. Okay? Another thing is if you have, let's go with $2,000. If you have $2,000 in your account, okay, that's $2,000 you can use for potential. If you put $500 in your pocket for personal use, that drops down to $1,500. Maybe that's the difference between you getting the deal of a lifetime and paying $1,800 for that deal of a lifetime, or coming up short. Now, can you pull funds out of your personal and throw them into your business? Heck yes. Starting out, you're going to have to. Because starting out, when the bank wants you to have money in that account, you're going to have to put like a couple hundred into that account starting out. You're going to have to put like, I want to say they had minimums without getting fees, but I'm pretty sure they encourage like $100 to $200. You take out of your personal, you throw it into your business account. That way your business account has something to pay for all your business, for all your labels. Okay? Because you're not going to want to pull those labels out of your personal account. You want to have those shipping labels come off of your business account. You want to have your what the heck, pirate ship or whatever the heck you use, shipping provider. Pull that right out of your business account, so there's no question about it. I like that pirate chick gives me a little receipt at like midnight of how much I've spent too, but in an email. That's kind of nice. So you still have all that, but but all that's pulled out of your business account. So if you have $0 in your business account and you sell something, you're going to, and you don't get paid for a week, and you have your eBay set up or whatever set up, so you're not getting paid for a week. Or if it's like Whatnot, where they don't pay you, I think I got to play with Whatnot still, but if I'm getting there. But if you or if it's like Whatnot or a couple of the others, where they don't pay you until the item arrives to the customer, I gotta look into it more. But I think a couple of them do that. If it doesn't arrive to the customer, you don't get paid. So, or you don't get paid until that happens. So, yeah. Well, in that case, you already have to print your shipping label out. Let's go 10 days. 10 days before that. So you don't get and if that account's $0, you're now in the negative right out the gate. So you got to actually put some personal money anyway. Once you put that personal money in that account, and that account builds up to $2,000 or whatever. Let's say you put $500 into that account. After it hits $2,000 or $3,000 or whatever that you feel happy with, you can pay yourself back. When you pay yourself back, that's zero taxes on it. Okay? Because that $500 was a loan to the business. Okay? And then you can get paid back. Now, is there interest on that loan? Talk with your CPA and talk with an attorney and talk with an accountant, because I don't know. Like I'm saying, it's you versus you at that point. If you're running this as a sole prop, it's the business that would be paying you interest on a loan. It would be your business paying you interest on a loan that you gave the business. So when they pay them back, the business is going to pay you interest on that loan of whatever, and it's going into your pocket. So I don't see it as a thing to do, but can you do it? Yes. But anyway, that's a business loan. So when you pay yourself back from that business loan, that is there you go. Okay, so that's not, it's 0 to 0. There's no taxes involved when you pay yourself back. Now, if you have employees and all that, or if you do loans like that, that gets complicated. That you need to talk with the people about. That might have taxes involved. I'm pretty sure it does have taxes involved when you do those loans, and all that, and interest and everything. You'd be crazy not to do interest, but there you go. So that's why you want to. So this, man, is this thing long? I'm running just under an hour here. So that's why you want to run. If you can do it, run a business out of your home. It's 2025. They made this real nice and easy for you. So yeah, I'm going to keep this thing under an hour. I apparently like talking to a screen. So there you guys go. Just going over all this fun stuff about having starting a business and running a business and doing it the right way, so that you're not running into an issue where you're not getting these deductions, because they really do make sense, and they really do add up, and they really do put more money into your pocket than you would otherwise be losing. Okay? I'm saying a couple of these things are 100% write-off. 100%. You can write them off if you use them for business only. That's a huge deal if you look into a couple of these items. So there you go. Talking about business, why you want to have the business, why you want to run a business out of your home if you possibly can. Maybe you don't want to, don't do it. It's all good, no big deals. Yeah. ChatGPT can make mistakes. I make mistakes also. Talk with professionals. Okay? All right, people. Thank you. Have fun.